Is the S&P 500 headed to 10,000? Could the business of AI become a $1 trillion market? And is Canada going to cut interest rates again? We're exploring all those stories in this week's Market Moves. Let's dive in. Okay, let's start with, is the S&P 500 headed towards 10,000? That's the view of one longtime Wall Street strategist. Ed Yardeni of Yardeni Research said in a new report he believes the S&P will hit that milestone by the end of this decade. Now, if that happens, it would mean more than 60% in additional upside for the benchmark U.S. stock index. Yardeni cites things like pro-business policies in Washington, an improving interest rate environment, and tech's continued growth as factors that will fuel corporate earnings, and that could keep investors feeling bullish. And even one of Wall Street's most prominent bears is starting to sound more bullish. Morgan Stanley strategist Mike Wilson said in his own note, he believes that the S&P 500 could reach 6,500 by the end of next year. That's not too far off Yardeni's 2025 target of 7,000. Meanwhile, the stock market this year has been fueled in part by a frenzy surrounding artificial intelligence, and new estimates on how big that market could be are pretty eye-opening. According to research from analysts at Bloomberg, global revenue tied to generative AI could reach $1.6 trillion by 2032. That'd be up from $36 billion in 2022, and it would bring worldwide IT spending on AI from around 2% all the way to 15%. Why? Well, as consumers embrace AI, businesses are supercharging their products with this technology, and that means more spending on hardware and software and the services that are all tied to artificial intelligence. And finally, some traders are rethinking how aggressive the Bank of Canada might be at its next interest rate decision. According to Bloomberg, market expectations for a second straight 50 basis point cut by the Bank of Canada came down after the most recent inflation report, which showed prices reaccelerating in October. Now, beyond inflation, the bank might also have to consider how lower rates further impact the Canadian dollar, which has weakened against the U.S. currency since the presidential election. Now, the flip side to those considerations is that Canada is preparing for a wave of mortgage renewals. According to the Bank of Canada, more than 4 million mortgages will renew over the next couple of years. That's about 60% of the entire market. And if rates don't come down significantly, those renewals could leave more Canadians feeling cash-strapped. And that's our market moves for this week. Thanks for watching. Don't forget to like, subscribe, and let us know in the comments what market moves you're watching.